You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play.
The options market can be a confusing place. Sorting through the daily avalanche of data, alerts, updates, articles, and analysis to find the most important information is an overwhelming prospect. But now you have help. Welcome to the Options News Rundown, the only program that breaks through the noise to bring you the most important news and information from the world of options. Every day, we bring you the top 5 option stories curated by the options experts at theoptionsinsider.com, the premier source for options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider. And now it's time to break through the noise. It's time for your Options News Rundown.
Good morning. Today is Monday, February 11th, 2019. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com, and it's the top 5 things to know in the market on Monday. The first thing to know is U.S.-China trade talks resume. A new round of U.S.-China trade talks begins in Beijing after the most recent set of negotiations concluded in Washington last week without a deal. Low-level officials kicked off the meetings on Monday, led by the American side by Deputy U.S. Trade Representative Jeffrey Garish. Higher principal-level talks will take place Thursday and Friday with U.S. Trade Representative Robert Lighthizer and Treasury Secretary Stephen Mnuchin. The two sides are trying to hammer out a deal ahead of the March 1st deadline when U.S. tariffs on $200 billion worth of Chinese imports are scheduled to increase to 25% from 10%. The second thing to know today is U.S. government barrels towards another shutdown. Political headlines will remain in focus as talks on border security funding collapsed after Democratic and Republican lawmakers clashed over immigrant detention policy as they worked to avert another U.S. government shutdown. The talks are stalled right now, Republican Senator Richard Shelby told Fox News Sunday. He said the impasse was over Democrats' desire to cap the number of beds in detention facilities for people who enter the country illegally. Democratic and Republican lawmakers in Congress have until Friday to agree on a budget deal to avert another partial shutdown of the federal government. Third thing to know is U.S. futures point to an upbeat open. U.S. stock futures pointed to a higher open at the start of the trading week as the market players keep an eye on domestic and international political developments. Elsewhere, European stocks were higher, with nearly all major bourses across the continent in positive territory. Among national indices, Germany's DAX and Britain's FTSE 100 were both up by more than 1%. Earlier, shares in Asia closed mixed. The Shanghai Composite Index jumped 1.3% as markets in China reopened after a week-long Lunar New Year break. The fourth thing to note today is this is the last big week of fourth quarter earnings. About 60 companies listed on the S&P 500 are set to report corporate results in what will be the last big week of the fourth quarter earnings season. Lowe's, Diamond Offshore Drilling, Chegg, and Kemper are on the agenda for Monday. Other notable companies set to report this week include beverage giants Coca-Cola and Pepsi, cannabis companies Canopy Growth and Aurora Cannabis, and graphics chip provider NVIDIA. Cisco, Deere, Under Armour, Activision, Blizzard, AIG, Yelp, TripAdvisor, Canada Goose, CBS, and Twilio will also provide updates. And the fifth thing to know today is the US dollar hits a 2019 high. Away from equities, the U.S. dollar pushed higher against its major rivals, hitting its best levels of the year. That's as lingering fears over the outlook for global growth drove appetite for safe haven assets. The U.S. dollar index was up 0.2% at 96.62, a level last seen on December 7th. It is headed for an 8th consecutive day of gains. Meanwhile, in the bond market, U.S. Treasury prices slipped, pushing yields higher across the curve, with the benchmark 10-year yield rising to 2.64%. No major economic reports are expected this morning. The highlight of this week's data releases will come on Wednesday, when the U.S. Commerce Department publishes January inflation figures. Our second story today is from Investing.com, and it's an exclusive. German trade surplus with the U.S. declined in 2018, but was still almost 49 billion euros. Germany's trade surplus with the United States, a frequent source of tension with U.S. President Donald Trump, declined last year, but nonetheless remained around 49 billion euros, data seen by Reuters showed on Monday. Trump has frequently criticized the large trade surplus that Europe's biggest economy has with the United States, and has threatened to put tariffs on German cars in return. But German Chancellor Angela Merkel has questioned Trump's analysis, saying that trade surpluses were calculated in an old-fashioned way and that the United States runs a large account surplus with Europe if services are included in the total. In June, Merkel suggested that existing international trade accounting systems should be updated. Preliminary calculations from the Federal Statistics Office showed that German exports to the United States rose by 1.5% to a record high of 113.5 billion euros in 2018. That meant the United States remained the biggest buyer of made-in-Germany goods ahead of France, which purchased 105 billion euros worth, and China, which bought 93 billion euros worth. German imports from the United States increased by around 4% to 64.6 billion euros. And our third story today is from MarketWatch.com. Tesla is up to speed on Model 3 production, but now servicing them is a priority. Gus Schmidt was so excited when he received his Tesla Model 3 sedan in August that he tweeted a photo of himself and his wife grinning next to the electric car. 6 weeks later, the thrill was gone. The Fort Lauderdale, Florida resident damaged his bumper in a low-speed collision and then had to wait 3 months for the repair shop to get the spare parts from Tesla and fix his car. The unusually long wait for a repair underlines a drawback of being a Tesla customer. The upstart car company has created a coveted luxury brand, but is still learning some of the basics of the auto business. Tesla has cranked up its Model 3 production in recent months, enabling buyers like Schmidt to get their vehicles after long waits. But as Tesla's U.S. sales approach, those luxury automakers like BMW AG and Daimler Chrysler AG's Mercedes-Benz, it has encountered new logistical problems, from delivery and servicing of a growing fleet to balancing supply and demand. And that, ladies and gentlemen, is news you can use for today, February 11th, 2019. This is your Options News Rundown. I'm Dan Passarelli, Trade Smart, and have a great week.
The Options News Rundown is brought to you by Market Taker Mentoring, the leader in options trading education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's Live Advantage Group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.